The child tax credit and additional child tax credit are calculated automatically by TaxSlayer if you enter the dependency information correctly. The credit for child and dependent care expenses is listed on the Form 13614-C intake form as a basic item, so it will be on the basic test and also the advanced. We'll start this lesson with a brief review of refundable and non-refundable credits because there are refundable and non-refundable components of these credits. Then we'll explain each credit and talk about how to determine whether a taxpayer is eligible. We'll get into determining the amount of the credit even though TaxSlayer will do this automatically. And we'll finish up with some common errors when entering the credits. You'll recall from our last class, a non-refundable credit cannot reduce taxes owed less than $0. In other words, it will only lower your taxes due, it will not increase your refund. A refundable credit can reduce taxes owed below $0. That means you could actually receive a refund even if you owe no taxes. Most of the credits, with the exception of the additional child tax credit, are non-refundable. The child tax credit is a non-refundable credit that allows taxpayers to claim a tax credit up to $2,000 per qualifying child, which in turn reduces their tax liability. If a taxpayer cannot claim all or part of the $2,000 non-refundable child tax credit because they don't owe that much in taxes, they can still qualify for the refundable additional child tax credit. To be a qualifying child for the child tax credit, the child must be the taxpayer's dependent and meet certain criteria to qualify for the credit. Ready for this list? Those criteria are: the child is under age 17 on December 31st of the tax year. Child is a U.S. citizen, U.S. national, or resident of the United States. The child must be claimed as a dependent son, daughter, adopted child, stepchild, eligible foster child, brother, sister, half-brother or sister, stepbrother or sister, or descendant of any. This child must not have provided over half of his or her own support, and lived with the taxpayer for more than 6 months of the year. This child must also have a valid security number. Note that most of this information is on the intake and interview sheet. If you enter the dependent into TaxSlayer, it will check the box on the 1040 and award the non-refundable credit. If the taxpayer meets the earned income threshold and has not used up all of their child tax credit, the additional child tax credit will also be applied. The income limits are well above our client's adjusted gross income. The maximum amount taxpayers can claim for the child tax credit is $2,000 for each qualifying child. Taxpayers who do not get the full $2,000 of the child tax credit may qualify for the additional tax credit. The additional child tax credit allows eligible taxpayers to claim up to $1,600 for each qualifying child. In the example shown here, the taxpayer has 2 kids and qualifies for earned income credit, so we know they are also qualified for the additional child tax credit. The child tax credit for 2 kids equals $4,000. However, the total tax is only $1,263. Therefore, the child tax credit equals $1,263, which wipes out the taxpayer federal tax liability, and the taxpayer receives an additional child tax credit. The additional child tax credit equals $4,000 minus $1,263 to a total of $2,737. The additional child tax credit is refundable, so $2,737 goes into the refund. If you enter the filing status, dependent information, and income correctly into TaxSlayer will calculate the CTC and ACTC amounts, complete Form 8812, and put the results into the correct lines on Form 1040. You should go over those amounts on 1040 with the taxpayer during the final return interview. The $500 non-refundable credit covers dependents who don't qualify for the child tax credit, such as children who are age 17 and above, or dependents who meet the relationship test, such as elderly parents. Taxpayers cannot claim the credit for themselves or a spouse if married filing jointly. And once again, TaxSlayer automatically determines eligibility for the credit, calculates the amount of the credit, and fills in the appropriate tax forms. When considering the child tax credit or credit for other dependent, it is critical to interview the taxpayer thoroughly to correctly identify eligible children. It is helpful to annotate the intake and interview sheet with your assessment of eligibility for these credits. In this example, the interviewer has written CTC for child tax credit next to Billy's name and ODC for other dependent credit next to Ethel's name. You should also note any unusual situations on the intake and interview sheet. In this example, we would expect to see that TaxSlayer entered the dependents' names and checked the appropriate boxes on the 1040. A taxpayer can claim this credit if they have a qualifying dependent and have dependent care expenses as a result of working. It isn't a dollar-for-dollar credit, but the credit can range from 20% to 35% of the dependent care expenses incurred. The amount that can be claimed is $3,000 or $6,000 if there are 2 or more qualifying dependents. The percentage of the claimed expense that is deductible begins at 35% and starts ramping down to 20% at $43,000 adjusted gross income. There is no adjusted gross income limit, so the credit remains at 20% over $43,000 adjusted gross income. When claiming out-of-pocket expenses for daycare, do not include any daycare benefits provided by the employer. Those are reported separately on Form 2441. Employer-provided dependent care expenses appear on the W-2 Box 10. If you encounter a W-2 with an amount in Box 10, you must complete Form 2441. You'll need the daycare provider information and the amount paid, otherwise the taxpayer will not get the credit and the amount in Box 10 will not be treated as income. TaxSlayer will not prompt you to complete Form 2441. TaxSlayer will calculate the amount of the credit based on the expenses entered, the number of dependents, and the adjusted gross income on the return. You can go to Form 2441 and see all the math. There are 5 eligibility tests to qualify for this credit. Use the screening sheet in the 4012 to determine if the taxpayer meets the requirements to claim the credit. The qualifying person test means that there's a qualifying child under the age of 13 when the expenses were incurred, or a person incapable of self-care who lived with the taxpayer for at least half of the year. The earned income test is where the child care expenses can't be more than the lesser of the taxpayer or taxpayer's spouse's earned income. Work-related test. The child care expenses must be so the taxpayer and spouse can work or look for work. Joint return test. A taxpayer's filing status can't be married filing single unless considered unmarried. Provider identification test. Taxpayer must have the daycare provider's name, address, and tax ID number. Tax ID number is not required if the provider is a tax-exempt organization. A qualifying person can be in 3 categories. 1. A child under the age of 13 whom you can claim as a dependent. If the child turned 13 during the year, you can claim for the portion of the year they were under 13. 2. Your disabled spouse who is physically or mentally unable to care for themselves and lived with you more than half the year. 3. Any disabled person who is physically or mentally unable to care for themselves and lived with you more than half the year and you can claim as a dependent, except if the disabled person had more than $4,700 in income exclusive of Social Security benefits, or the disabled person filed a joint return, or you or your spouse could be claimed as a dependent on someone else's tax return. If married filing jointly, both the taxpayer and spouse must have earned income. Total care expenses cannot exceed earned income. You must have paid the expenses in order to work or look for work. The provider can't be a dependent, your spouse, or the parent of the child. For example, you can't pay your ex to care for your kid, or your child, not your dependent, home from college to watch a younger sibling. Unless considered unmarried, you can't be married filing single. You must know the contact info for the provider, including EIN or Social Security number. You can attach a due diligence statement while you can't get this information, but that is a very rare case. To determine the amount of the credit, use Form 2441, Child and Dependent Care Expenses. There are 3 parts to this form. Part 1 is care provider general information. Part 2 is where the credit is calculated. TaxSlayer will help and apply the limits, either $3,000 for one child or $6,000 for 2 or more. Part 3 is the section where employer-provided dependent care benefits are reported. It does not have to be $3,000 per kid. One kid could be $1,000 and the other could be $5,000. You have to sort it out on the form. Be sure to double check your entries. Check the provider's name, employer identification number, Social Security number, and dollar amounts. If you see an amount in the taxpayer's W-2 Box 10, make sure that Part 3 of the Form 2441 is completed. Compare against the intake interview sheet to make sure the child dependent care box is checked. It may have been missed initially, so be sure that it is checked. Or maybe the amounts should not be child and dependent care credits. Just confirm and check again. The portion of pay for a household employee has to be allocated between time spent in child care and other household duties. That is out of scope for VITA. Let's take a look at what we learned this lesson. Families claiming the child tax credit will receive up to $2,000 per qualifying child for children under age 17. If a dependent is not eligible for the child tax credit, they may be eligible for the non-refundable $500 credit for other dependents. It's important that they satisfy the 5 eligibility tests to qualify for the credit, and make sure that we check intake and double check for error. We'll see you next lesson.